Happy Monday. Welcome back. It's Monday, May 6th, 9 o'clock. Hope you all had a good weekend. Let's get started for the Pulver Report. First things first, we know there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. It doesn't matter what you're trading, stocks, options, futures, forex, cryptos, you know the deal. There's risk. All right. Type of wire, yes, chat. Everything's coming through loud and clear. Let's come into the charts. We have a little pre-market action to the upside. SPY is actually looking to open up a little bit higher than the Qs. We do have a lot of earnings this week. 1,234 companies. Major news for the week. Let's see here. Getting into, it's all light and medium news this week. I will be keeping an eye out for, let me see if I can refresh this. Here's our week with Aussie cash rate decision. This is going to be Tuesday's trading day. Expected to stay the same. These central banks are still in this pause cycle for right now. The Fed continues to kick the can down the road. If there's going to be a cut, right now it's looking like September, November. One of those months looks like one for the year, and the market hasn't really budged on that. We had a good week last week. Earnings carried mainly by the likes of mega cap tech, Google, Microsoft, Apple. Those alone have pretty much lifted the broader market higher. This is a good week and a good indicator to see if we actually have some broad market strength, broad market forward guidance that looks positive, optimistic, or not. Then we're going to have to find out. Okay, but Aussie expected to keep the rates the same at 4.35. We'll find that out overnight going into Tuesday's trading. We look at other high impact news for the week. What's our bank holiday on Thursday? Ascension Day in Europe. Okay. Bank of England on Thursday, 7 a.m. Eastern Time. Looks like unanimous vote expected to keep rates the same at 5.25. So another pause there for the Bank of England. Pound GDP on Friday. CAD unemployment and employment news, which we had non-farm last week. Let's take a quick look at non-farm from Friday on the 3rd. I think the market, in a way, kind of liked this, where we had a slight revision up, 303 to 315. Forecasted 238 came in 175. Average earnings 0.3 came in 0.2, and unemployment 3.8 came in 3.9. That slight softening in the labor market is what the market was optimistic about. But we should keep an eye on these numbers simply because, jobs are definitely a sign of recession, can be a leading indicator when it comes to contractions in residential construction. If there's an 8 to 10% contraction in hiring, that typically leads to a recession. So it's not just your 2-year, 10-year yield and the inverted yield curve, because that's given us like a 2 to 3 year window. One of the kind of more accurate depictions has been a big drop and a big spike in unemployment and contraction in residential construction. So that's something I'm watching in the background. But after I see a print like this and the market is up, we have 1,000 plus companies reporting earnings this week. What I'm going to look for is really simple. I'm going to look at market breadth. So this is above the 50 period moving average and above the 200 period moving average. Right now, we still have around 5,100 companies below the 50. And we have, well, I'd say your majority for right now, that's 54%, are still below a 50 period moving average, which means this needs to go up. If we get more companies poking above that 50 period moving average, that means the broader market's trying to show signs of strength. And, your very simple indicators, your 50, your 100, your 200. If we're back above the 50, that means we had some pullbacks where they possibly tested those deeper levels, maybe crossed over, tested the 100, tested the 200, find some support, and then prices closing back above the 50 to get into a resumption of that trend. So we'll see if the trend following continues. Where does that put us to the upside? This is going to be a really interesting week simply because we're coming back into some floors that were established a couple weeks ago when we had some selling. So this is the QQQ. Right in here, we're past support, could offer some short-term resistance. We'll find out in the next, 24 to 48 hours if this actually holds. If the market is making its way up here. The way it did so is, I don't know. It's tough to say. I mean, this is a big Apple gap. To me, this gap from Thursday, Friday last week with Apple is very similar to what we saw with Nvidia, where I do think that gap ends up getting filled. So in a way, I'd almost like to see the gap get filled sooner than later and see if the strength is still there to then buy those dips and take it up into highs once again. I'm questioning the strength of the bull market just a little bit if we get immediately over, let's say over this week, if we get back up to the highs and we roll into, a fairly strong, or, if it's not strong, then I definitely have concerns. But if we have a fairly strong consensus with earnings, and we're starting to see market breadth higher, where more stocks are advancing above their 50 EMA or 50 SMA, then okay, fine. But I just want to be on the lookout for some type of possible correction, and sideways or a broadening pattern or a potential topping pattern is possible. So just going to keep the head on the swivel with a lot of the index stuff, and we'll see what the general market is doing overall. Pre-market, we've got the SPY up about $2 right now. Same thing. Previous support, possibly offering up some resistance. If I go into my dynamic trends option software, let's look at some gamma levels today. Let's say good morning to everybody. Keith, good morning. Keith, you're first in the Discord and you're first in the YouTube session. Nice to have you. Chris, good morning. Angela, good morning. David, good morning. Jacob, Donna. Same Donna. Thanks, Donna. Gary, good morning. Willie, good morning. Joe, good morning. All right, let's go to the SPY. Okay, so just today, to the upside, 516. If you're writing down some levels here. So this is pre-market. To the upside, 516. If we're going to gap to 513, makes things pretty interesting. So if we, Mondays are typically not a directional day, but if we gap to 513, make our way back up into, 515, 516, okay, fine. Does that leave a gap to fill? Does it leave a gap to fill? Right? So any type of, aggressive bearishness, and maybe I'm, getting too microscopic here on the smaller time frame. But one thing I'd be looking for is this. So watching a trend line like that and connecting these highs. So I could see after a sell-off, okay, if you're following my structure here, so this high, this low, and price has been pulling back, right? So, I mean, I said this in a session last week. I mean, if this was a Forex market, I would be more inclined to think that this level of support, all of this potential, supply would be getting filled, and then the market's going to try to flush lower. That's what I would think. Now, the technicals of the stock market and the indexes aren't nearly as obedient as a Forex market. So that being said, I mean, here's how we're going to find out. If we fade this week and all of a sudden we finish the week, indecisive or red, and this is still resistance, this support becomes resistance, or this pocket right here becomes resistance, then technically this is still in a, channel that might make its way back up to the highs again. But something tells me that going into summer trading, this high, this low is probably our new normal, where I would be almost inclined to sell highs, to buy lows and buy dips, and see if we just have a range through the summer. And then we have to have more kind of price discovery ahead going into, fall, with August, September coming out of the pre-summer, or coming out of the summer lull, coming into, Jackson Hole in August, going into the September effect. Then it's all about the election, right? So all these things are going to matter. Morning, Brad. Good morning, Steve. So that's where I'm at right now, analysis-wise. Gamma levels, 516 to the upside. And this is all potentially changing real time. But big ones that I'm looking at as far as histogram, 516 on the upside, and a retest of 510, which gets us into kind of Friday's indecision. So Friday is a pretty big island candle if you look at it right here. So this would have been Thursday. Friday was a big gap higher, and not sure. Oh, it's a 4-hour chart. That's why. There's my Friday candle. So from Apple's pushed up, everyone got excited about the buyback program. Big gap on Friday morning. There's a big island candle right there. So we will see what the day gives us. If we're opening here and we're staying here, or if we have two kind of, indecisive wick candles, or indecision doji candles, or you want to call them. We'll see. If it keeps going higher, fine. I mean, it's lifting the broader market for me. It's lifting the the portfolio. So no complaints. It's just I technically think that I just want to buy it cheaper, I guess, right? I'd rather be buying the SPY down here, right? But the reality is we did have a 5% correction. That's a pretty healthy correction. 7, 8, 10% is very healthy. I mean, that makes traders a little bit nervous. But when you get a chance to buy a 8 to 10% correction, that's good. However, I think we're in possibly one of those periods where a 3 to 5% correction keeps the bull market intact. Anything deeper than that, 8, 10%, I don't know if we have the strength to get back to these highs. So anyway, we're about to find out. So this week, I'll probably trade pretty neutral, looking to see what happens if I can position myself for, option selling at the lows, option selling at the high, see what this looks like going into this week's expiration, which is going to be the 10th. Out to the 17th as well, and see if we can stay kind of contained in these areas. So I'll look and see where the deltas are at. What is it to trade up here, down here? If it's single digit delta, that's fine. I'll put in some prices that I'd like to get filled out, leave them pending, and we'll continue to watch everything this week. Calendar-wise, we went through it. RBA, Reserve Bank of Australia, has a rate decision this week, expected to pause. Bank of England on Thursday has a rate decision, expected to pause. No other major news that I'm watching really stands out. Looking at earnings this week, we have over 1,200 companies reporting earnings. Some notables, you have Robinhood, Marathon Digital, Shopify, Uber and Lyft, Disney, Beyond Meat, Airbnb. Some notables there. I know Rivian got lifted up last week as Tesla's been ripping from those 140 lows. Tesla's up to like 180. We'll take a few of these with equities on demand. I'm not sure which ones we've actually had. Earnings wise, it's been tough to keep prices contained, but naturally we did find a couple. PayPal, which I know we had the expiration on PayPal. Was it PayPal? Was it 5? Was it 5? It must have been 5.3 because I closed it out. Let me check. Equities on demand. All right, because I know we had Capital One and PayPal. I took partial losses on each one of those. I want to see what the expiration was, if it was a 5.3 or 5.10. Capital One was a 5.3. PayPal was a 5.10. Fudge. So maybe I dumped that PayPal position maybe a little bit earlier. It's okay. It's sitting right in the middle. I had a 68 by 78 and a 66 by 56. We're trading at 66 right now. I would need PayPal to have a huge week, one way or the other, to make money on it. I closed it out for a partial loss. It was a $4.80 debit, closed it out for $1.80, took a $3 loss, but we made $1.65 in the SPY, made $1 in the SMCI earnings play, made $1.50 on Meta, made $1 on the SPX last week, made $1.50 and $1.75 in the NDX last week. So not a huge deal. And then Capital One was another small loss at $85. So that one, again, kind of disappointing. Just didn't feel like moving. It was a 145. It was offering $3, $4, $5, $3-4 really to the downside, and just looks like we're kind of stuck here at the top. So anyway, there will be some earnings action we'll try to participate in, possibly an Uber, possibly a Lyft. Lyft isn't super expensive. Uber's had a great run. We're at all-time highs. Rivian, possibly as well. EVs have been, not a lot of EVs do I want to play, but at least price-wise, there's a new injection of cash with Rivian announced the last couple of weeks, and so if they have another lifeline there, hopefully they're looking at making cheaper vehicles so they're not losing on every one. Anything else that I really like? Possibly MARA. That's a Bitcoin related one. So let's get into some other charts here. Let's go dollar index. Dollar index had a pretty swift sell-off. This was FOMC. So if you go into all of last week, even with FOMC, the market did push the dollar down a little bit lower. Again, to me, this is level of support. I know a lot of traders out there are trying to go anti-dollar. I just think that until this breaks the trend line, I'm still giving the dollar a chance to possibly have higher lows and see if the dollar catches bid this week. Okay, if it does, this support is still support that's still valid, and we get back into the 107, 108 level for resistance. So again, I said this last week in my trading rooms, if we're below 103.85, 103.85, 103.85, I can get rid of that since it was back and forth a bunch. But if the dollar goes below 103.85, I would be a little bit more convinced that, okay, dollar's putting in possibly a topping pattern, maybe looking to sell the backside of the trend line. But based on this price action for Friday, if we see a supportive move on the dollar that shows green, looking for higher lows, looking for this thing to start carving out higher highs and looking to stay, with the context of the broadening pattern, resistance here. I look for resistance around that 108 to 109 handle. Okay. Now, after that, I'm definitely more interested in shorting the dollar in this 108, 109 region. Worst case scenario is I'd be very bearish going in the dollar if we got all the way back up to these highs. So area 1, area 2, not going to call the top on the dollar, but certainly if we hit this level, major selling point. If we hit this level, which would be a surprise upside move, major selling point. But that hasn't happened yet. So that's my outlook on the dollar, just watching a couple levels. Oil's had a pretty tough week, and we're starting to threaten the points that I thought would be pretty supportive. $80 I thought would be pretty supportive. We've come down below that. We're at 78.50 right now. I said that we need to really stay above this like 77.50 zone, which is right here. So if oil's going to catch a bid, again, it's going to have to be sooner than later. I'd say within the next 1 to 3 trading days, we better see some bullish support. If we don't, this could be threat of a slowdown. So especially when the energy sector is up. I mean, if you're looking at year-to-date sector performance, the energy sector is one of the best performing sectors of all right now, and that's probably not a good thing for the overall market, which is another reason I'm not super bullish on everything, right? I mean, this is year-to-date. We have, and thanks to Apple, I'm pretty sure, was this Apple with communication services? What's that, 20? So Meta and Google. All right, never mind. This one's not Apple, but Meta, Google, crazy amounts of weight in communication services. 10.39 for the year, but outperforming that is energy. Energy is the best performing sector this year. Utilities is not that far behind with 8%. Also surprising, right? I mean, just performance alone, we have some crazy runs this year in utilities companies. So I think we should spend some time on this this week. I mean, I think these are trends that are possibly here to stay for the year, especially utility companies when we're getting into AI stocks. I know that Gary brought that up, not that long ago. I think the hard part is picking one stock, right? So, I mean, if we're doing a sector play with utility companies that are advancing energy efficiency or making more money because the demand on energy and usage from AI infrastructure is just going to be that much higher. The hard part is options around utility companies are difficult. I mean, if we did XLU related plays or XLE related plays, I'd rather trade options around those than trying to pick individual companies when they have monthly options only, credits on those monthly options are terrible. You can't really own the stock necessarily. You have limited agility when it comes to diagonal spreads or something like that. So probably more liquidity if we got into the actual sectors. So XLU, XLE would be something we can consider for equities on demand. Real estate down this year, consumer discretionary down this year. Interesting dynamic, led by energy, led by utilities, and that makes things a little sketchy moving forward. As far as when you see energy and utilities lead the way, that's usually not a super strong bull market, right? That might be a bull market in those two sectors, but that's more of a defensive play, or I don't know. That's just catch up, I guess. I don't know. Utilities have been beat down a lot, so I'm not overly excited about utilities. But on this sense of value, they have been so beat up and they're so inexpensive from last year to this year that maybe as a whole that's a good thing to look at. So, all right. Anyway, oil. If we turn bullish, probably the next 1 to 3 days, then I think the bulls can still kind of save and salvage this channel support. If we press down below 77.50, I'm a little more skeptical of the bulls returning. So I mean, we didn't get all the way to 90 like I thought. We got up into 80. I mean, it's pretty close. 87.50 wasn't too bad, but it's not the highs. So if we turn bullish, okay, maybe we have a range. Maybe there's one more, run to the upside before there's a chance to short this at better spots to the upside. But watching oil, of course. Gold. Bought the dip on GLD last week, looking to buy some more gold, see if this gets back up to highs. Measure move all the way to 2470. Here's a trade on GLD. So I bought not fractional shares. I just bought a little tranche of 25 shares last week. And we'll look to see. So right now it's up about $2.50 to the upside. We'll see if it's something as simple as just trendline break, bullish price action, and then gold is off to the races once again. Silver, see if silver is going to perform as well. Silver, really nice bounce. I mean, you couldn't ask for a better technical play right there at $26. SLV, same thing here, $24.95. Bouncing nicely, up about 75 cents just off of this breakout point at 23.40. So again, look for a trend line break. I think silver and gold, keep an eye on those. They look pretty good, especially, I mean, if we see a weaker dollar, they should be performing pretty well. Bitcoin tapped a couple alerts this weekend. We're at 63,000. We're at 63.5 right now. This is going to be an important spot for Bitcoin. I would watch this kind of structure right in here. So if we are to pull back in here, you'd want to see those bulls stepping in and defending, I would say, this pocket. So as long as price stays above, let's say above like 53 to 52,000, that'd be a big demand zone on Bitcoin. If we stay above 52, 53,000, then I think that we maintain this rally, have a bit of a correction cycle, a bit of a wedge forming, and we look to see if Bitcoin can make another breakout towards the 70s. But that's an important spot to watch. I can probably trace that out a little bit with some trend lines. Keep an eye on that structure right there. Okay, so I'm going to set a chart alarm on this trend line. There we go. So if we break the trend line, chart alarm set above and below, keep an eye on that one. We did oil, gold, silver, did Bitcoin, did the indexes. Individual stocks we'll take a look at. Currency-wise, we did the dollar index. So let's go currency-wise. Aussie CAD doing pretty well. I'm bullish on the Aussie CAD. It's getting back up to these equal highs. I'm trying to get the Aussie CAD back up into this range around 94 to 95. So I'm still looking pretty bullish up here. I like this trade. In fact, I might actually add I don't know. I don't really want to add, at the high, but I do think we're going up towards 94, 9,500. So I don't mind this trade. If I add here, add here, add here, try to take it up into 94, 95. I think that's a good profit zone. So a little dollar cost averaging to Aussie CAD looks pretty good to me. Swiss pairs, I'm still buying against the Swiss. So Aussie Swiss starting to creep up above these highs, which is totally fine. I'll take that trade. I'm still in the trade, and more upside potential for me. Hopefully, we're talking about this pair. I mean, major support was all the way back here around 64. We're still trading at 6,000. So 64, this is roughly the halfway point as well. You take this resistance and this support, go halfway in between. I mean, to me, this is a logical, I'd say that's a target 1. We get all the way back up here to 7,000. That's a target 2. So still bullish on that, enjoying some of the carry trade. Aussie New Zealand, 110 with some divergence. Traders with me in this trade in the flex trading will probably take some profit. We got it at 108.60. We're up about 150 pips. We should probably protect that profit. I think we take the profit. I say that because on a higher time frame, we rarely see overbought conditions like this. Oversold conditions would come into a bottom. It's an indicator I don't see line up very often, so I think I'm going to take the profit. Where's my phone? Somewhere. I'll take the profit. So I'll mark that up. We'll talk about that tomorrow in the flex room. But we're up. We had our stop loss move to plus 30, trying to let it run a little bit. I'm up 150 pips. I'm just going to take it, protect it, and we'll look for another entry. Okay. Aussie dollar, anything here? Aussie dollars, it's a bit messy. We've got support at 63, resistance at 69. A lot of chop inside here. The dollar index has been clear to read from just the DXY, USDX, and Euro dollar, pound dollar. Aussie dollar, New Zealand dollar have been a little bit on the sloppy side. Dollar yen, obviously anybody's guess with intervention twice last week. So dollar crosses are still trying to find some direction on the dollar index. CAD Swiss, CAD's a little bit softer. I still like this indecision area to look to buy. We had a nice chance to add in on this pullback, which we did. The next part would be either adding in, again at 65.60 or so, or just waiting for a break above 67, trying to get up to 68.30. If we get up to these highs, that's a good target 1. We break and go above that high. This could be a big bullish pattern all the way here. Left shoulder, head to neckline, right shoulder, bigger reversal pattern into that demand zone. That's my profit target on my CAD Swiss position is 71 to 7,200. So still looking for the upside there. Notice I'm not going into yen pairs right now. I'll do that in a second. Euro wise, Euro Aussie, son of a gun. So we did have a break, retest, and go. Interesting. So we had some risk on trading last week. Aussie was a little bit strong. That was the box we looked at in class. I didn't take the trade. I wasn't sure if we were going to get some risk off trading, and we traded back, up to the yellow box resistance. But it was a high to low pullback, and then we're going lower. So if you are taking that trade, if you follow that out of the box breakout, then you're looking to take out, or challenge that low. That'd be target 1. We challenge this low. That'd be target 2. And just cancel and replacing and try to move some stop losses. Euro CAD, not my favorite. Chop suey there. Euro Swiss, still looking to stay long. Dips and pullbacks are totally fine. Euro New Zealand, pulling back as well. Euro dollar. If the Euro dollar breaks here, this is where the dollar index comes into play. If we break that trend line on Euro dollar, I would say I don't really want to see the Euro dollar take out a high. If we make another lower high, so it's opening bell right now. Okay. We have this level right here getting tested, which it's right on it. If the euro dollar stays below that trend line, we could still see another move to the downside. So I want to see resistance here. I'd want to see a trend line break right there. So again, watching the DXY. Pound Aussie. I think I want to look for some confirmation. If this is a buy zone and we're coming into a midpoint, good structure over here to the left. See if we can get a buy point in here. So it's hard to say that I want to just jump in and buy it. I think we can go to a smaller time frame on some of my indicator systems like Masterflex Right Trader and just try to find some confirmation. before we take and assume a position. Pound Canadian has not taken out the high yet. I'm still short on Pound CAD. As long as we don't take out 72.50, we're okay on that position, but I'll watch that one pretty carefully. Pound Swiss, still looking to add on dips. Pound New Zealand's a little bit of a broadening pattern. It's kind of choppy right now, so that level. Pound dollar, pulling right back into this yellow box again. This has been a real pain in the butt to trade. Dollar in general has been a little challenging. New Zealand CAD, I like New Zealand CAD to the upside, like Aussie CAD as well. I still think New Zealand CAD has room to get back to 84, possibly back up to these bigger swing highs all the way to 88. So I'm looking to see if we can finally break this chop and head higher towards 88. New Zealand Swiss, still buying dips and holding long for positive swap. New Zealand dollar, pulling back, previous support right around 6,000, 60.50 or so. As long as the bears kind of defend that zone, look to see if the dollar gets a bid. Okay, if we're back up above this, then sure, we're range trading this back up into 62, maybe into 63, and we'll see more bearishness on the dollar. If the DXY breaks below 103.80, 103.85, then we're probably talking maybe Aussie, New Zealand performing better against the dollar. Dollar CAD, I'm still buying the dollar CAD. My stop loss is right here. So I bought, this turning point. We had some profit. We turned back again last week. I'm going to see if this is just some sideways support or some sideways structure that we can trade through. But as long as we stay above that trend line, keeping a close eye on that one. Dollar Swiss, I'm still long. Pullbacks are fine. All right, let's talk yens for a second. So we had 2 days of intervention last week, Monday and Wednesday. We came right back in to retest this 152 resistance breakout point to the pip, and now we're showing a bit of a U-turn on that low. So high to low, I mean, that's a pretty big move, right? 160 all the way down to 152, 800 pips, but is it enough to be, full-on Japanese yen strength and follow through? Possibly not. So I'm still very skeptical of follow through with yen strength. I think if the yen strength is here to stay, we have bigger problems across the board for the financial markets. The yen is still a safe haven currency, despite all the radical, monetary policy that the bank has displayed the last, decade plus. But you can still see when we have aggressive risk-off trading in the stock market, the Japanese yen and the Nikkei tend to be, attached to that. So, our recent sell-off we had in April, early April, if you go to the Nikkei 225, okay, I mean, that sell-off was very much a part of that, right? So if the Nikkei is going to continue to carve out slightly higher highs and try to get back to all-time highs again, I say they're doing that on a weaker currency. 160 appears to be a level that's defended right now, right? But I think that, again, I'm not calling the bottom here on the dollar yen or any yen crosses for that matter. But if we see some structure in here or some smaller time frame patterns that are giving you bullish confirmation, I think the easier trade is to buy that dip, see if we can come back and retest these highs, and then we'll see if this market actually, has what it takes to go uncontrollably higher where it seems like, oh my gosh, when's the next intervention? Or maybe now the structure is in to give, sellers a chance to defend 160. And then I still think that the bigger unravel is we got to break this larger trend line. This is not the spot that I'm calling the top on the dollar yen. If anything, I was fortunate last week to have some systems do pretty well. I mean, we looked at 6-figure max on Friday. We needed trades to start responding to the upside. If the yen crosses are softer this week and we get into the middle of this point, I'm going to clear probably another. I'm trying to think how many yen crosses I'm trading. I think all but the Swiss yen. So 6 pairs at 500 pips roughly. That'd be close to 3,000 pips of profit this week. And we don't even have to get back to the highs. We just have to get back to about a halfway point. So I'll be watching that pretty closely this week and see what happens. But if we, have put in at least a short-term bottom and we're just retracing to kind of settle back in from high to low, pull back 50%. Market's just trying to find some equilibrium, right? But lots of volatility in these yen crosses. I still think just be careful. Trade small. Don't try to be a hero on the yen pairs because I think just like natural gas has been labeled the widowmaker, I think that Japanese yen could do the same. We'll call it Japanese yen could be Harry Carry, where you can just gut your accounts if you aren't careful. All right, let's see here. Any other thoughts? Any other questions for me? Here's the SPY, slightly higher at 513. Let me float this over here with a 5-minute chart. Let's get some real-time data. Another gap to the upside. As I said, the pre-market level's 516. See if these get filled in. So to me, 515, 516 to the upside. I'd rather see this fade a little bit first and then try to get there today. But Mondays are typically not directional. So since we gapped higher, see if we can get up to 515, 516. And then maybe the market wants to come in and fill a gap Tuesday. Not quite sure, but I'll keep an eye on everything this morning. So we'll see if this just pushes up and finds that gamma level first out. So not a huge, what are my big levels here? It's not a huge level. Let's look for some, let me see if I can get into my TD Ameritrade account. This would be Thinkorswim. Speaking of TD Ameritrade, Thinkorswim, if anybody is with Schwab, your TD accounts are transferring to Schwab, I think, after this weekend. So starting the 10th over the weekend, there's going to be some big migration into Schwab.com. The main platform is going to be Thinkorswim. It's going to be the Thinkorswim web platform, or just trading through the Schwab.com. The Street Smart Edge is going away. That was my point. But I have both. I mean, I'll migrate into Thinkorswim. That's fine. Get logged in. So I wanted to look some open interest. Let's have a look here. Let me go back to this chart. So let's take a look at some open interest levels. We've got the NASDAQ right here. Expirations for the 10th was a big open interest this week. So we have call open interest is greater than put open interest. Some bigger strikes to be noted to note is 17,600. We have an outlier here right at 18,000. That's on the 10th. 17,900, 18,000. I mean, we have a lot of open interest sprinkled up higher, but I'm just looking at the big spikes. 18,000, 17,600. Big open interest levels tend to act as I'm trying to think. It's either resistance levels, magnets. Price either gravitates towards them, rejects off of them, so they're either like bounce points or they're magnets, right? So I just like to keep an eye out for some of these big areas. If you go to the SPX, same thing on SPX. Dude, you just got off. What are you doing? Ugh. Well, I had SPX up. I'll just type in SPX here. What's up? That's weird. All right. I guess it doesn't want to change symbols on me. That's strange. All right, whatever. So that's why I was going to log into Thinkorswim, look at some big open interest levels. I could also log into my Tasty account for that as well. So anyway, all right. So we're clinging to another gap higher today. Let's float this down a little bit. Oops. Float this out. All right. So like I said, gapping higher, possibly drifting up for the day. I think if we have a open at 50 or 511, drift up into this area, I'm probably going to look at a sell trade. Let me see if I can do that right now. I might look at a sell trade and see if this will pay out. So SPX is higher. See if I can get up into this like 50. I mean, that'd be 30 to 90 is a 60-point move. I think I might try to take a stab at a 5,200 today. Let me see what that looks like on Tasty. So I'll get logged in. I'm just going to see if I can get in a little short-term play to sell it at 5,200. Come on. And then if you have any other charts, when does stock settlement change from 3 days to 1 day? I think that depends on the stock, doesn't it? What instrument are you talking about? A particular stock or instrument? That probably depends on the broker as well. So let me get logged in here. All right. Come on. $24.60 earnings today after market. All right. This is going to be a stock to watch. I mean, a big move. I mean, here's what's crazy. Even if this has like a 10 to 20% move, that's only going to be like a, $2 to $4 move. Let me see something on Palantir. My man Frank from A1 Trading is asking me about it. I haven't priced anything out yet on Palantir, but I'll look at it. So PLTR, 22.75% average. That's probably on the high side from what I can see. 12, 13, 16, 16, 17, 18, 19, 17, 20, and the average says 22.75. That's a tough one. So if we had a 20% move on a 24.50 stock, 24.55 times 20%, you're looking at a $5 move. Average weekly move is 286. And if I go into my Tasty platform right here, oops, don't minimize that. Let's take a look at Palantir. So we go to this week. I've got a 350 expected move. What's up, Tasty? Looks like the trading through the matrix. $3.52. IV rank 66.1. All right. I don't know. I'm gonna log out, log back in. That seems a little glitchy on me. Yeah, Catherine says Schwab sent an email. Look for the May date for stock settlement date change. Okay. All right. Thanks, Donna. Hey, Herschel, how are you? All right, let me get logged back in. I'm gonna take. I'll get this up and running in a second. Get back into my Tasty account. Okay, whole point was I wanted to log into Tasty and look at the 5,200 level. If I just sell it on the day. Average move on the SPX. So average move for the day is around 63 points. So go back to the week. Here's the smaller time frame. Actually, I'll go to the daily here. Let's go to the smaller time frame in this workspace. There. So we're already up on the day. Not a ton on the SPX. But you can see we've got some pretty less gaps from this was Thursday's close, Friday's open. Price never broke the opening bell range from 9:30 to 10:30 last week. We still have another 45 minutes for the opening bell range this week. But if I go into a $60+ move, okay, that puts me up around 60 points, around 51.90. So if I wanted to be, collecting as much premium as possible, I could do the 51.90. I'll probably do the 51.95 or 5,200 today and see if that will stick. That way, even if we drift higher, I should be pretty safe on that trade to grab a few bucks. So let me see what this looks like for today if I can get filled on it. SPX. Okay. Something tells me I need to get out of this trade. I collected 71 cents on the trade. I'm just gonna close this thing out and see if I can get out of here for 70 cents credit or 70 cents debit. So I collected. This was a dollar spread. Well, if I take a 5-cent loss, it's not a big deal. See if I can get out of here for 75. Filled. All right, I took a small loss on AMD, closed that position. That was an earnings play. We're back up to 154. I'm just taking a small loss in that. Let's go SPX. All right, so trade SPX. Today's expiration, the 6th. If I did a broken wing butterfly there, so I'm looking at like a 5,200. What? Gotta be kidding me, dude. All right, well, here's what I'm going to try to do. If we drift higher and I'm looking at a broken wing butterfly to sell this, and I'm going to try to get 50 cents, which means price has to push higher. If price pushes a little bit higher, I think that we'd be pretty safe not testing that 5,200 level today. So that would be from the close around 51.30. 51.28 to 52, that'd be a 70-point move on the day. Usually Mondays are fairly contained outside of what we had, for a couple of weeks in April. We had a sell-off on Mondays that were pretty severe. There was a Monday sell-off that was intense, a Thursday sell-off that was intense, but I'm going to try to get filled. And again, I've had a lot of these trades where I put them on here in prices that I want, for credits that I want, and it doesn't get filled. But I'm going to try to put this in for 50 cents, 2 contracts, and watch this one for closing bell today. Okay, so I'll take a look at this one. Pending. Okay. Pending. Okay. All right. So pending order on that. That is a broken wing. So 5,200. And that was 95 and 10. So that's a -4 at 5,200 plus 2 at, or yeah, that's right, 51.95, and then a +2 at 52.10. So that's a broken wing butterfly up here, which is out of the way. And I mean, if price works its way up here, that gets filled for 50 cents. The trade looks like this on a risk profile. It's a broken wing butterfly. So if it gets filled, it's getting filled for this 50 cents credit. And if we hit 5,200 by end of day on the pin, then that's potentially a 10x return, which rarely happens. But I've had it, pay 3 to 4x before closing bell. Collect the 50 cents. By the end of the day, I've seen it trade up to $1.50, $2 extra credit, and then your risk is down here. If it blows through 5,200, then the risk is beyond that, but it's still a defined risk trade. So that's SPX. Again, if it does nothing and just stays super sideways and quiet today, then it won't fill, and it'll just be a trade that expires and never fills. Check one thing here. All right. So I think that'll wrap it up. Okay. Any other charts to take a look at today? I'm going to jump into the A1 trading session. They're starting up. They're already live right now, but I'm going to jump in and start a 10 o'clock session. I'll just restream it here on my YouTube channel. So we'll take a small break, take a swig of coffee, see you at 10 o'clock. I'll be with Nick for a little bit, see if Frank wants to join me, and we'll talk some more plays. I'm looking to trade, maybe price out a couple of earnings if Frank jumps on with me. I know he's really interested in Palantir from what I can see. We could price it out this morning. And then 11 o'clock, I'll jump into equities on demand, and we'll continue to grind for the week. So NQ, let me look at the NDX trading at 980. All righty. Just a quick reality check would be nice in this thing. I've got a broken wing butterfly at 18,000 that I'll be watching pretty closely. See if we have a bit of a gap fill or just stays where it is. So anyway. All right. I'll see you in 5 minutes. Come back to the YouTube channel. Just take a small break. Thanks for being with me for the Pulver report. And we will resume this in a few minutes. All right. Thanks. Bye.